Hello, everyone, and welcome. My name is Nicola Corzine, and I'm the founding executive director of the NASDAQ Entrepreneurial Center. We are delighted to be having this conversation in partnership with you today, and we're going to get started here in just a couple of minutes. Now, before we do that, a couple of things to note. Most importantly, we appreciate all of the amazing questions that you all provided ahead of time, but we are also going to be taking questions live today. So please go ahead and make sure you use that Q&A function down at the bottom of your screen and populate with any questions that are top of mind at any time during today's conversation. Now, as you may have seen at the opening of today, we have announced relatively recently a major commitment to mentorship. We believe so much in what mentorship matters to businesses, not just now, but throughout the history of times. And we want to make sure more than ever that our entrepreneurs are supported by great, amazing talent that can help you as you continue to grow, pivot, survive, and thrive in these very challenging times. So we would encourage you, if you haven't already taken a look at this program, please make sure you do. If you have capacity and time to support entrepreneurs and want to give back, we'd love to have you as part of the program. And equally, if you find yourself in need of some responsive tactical help, we are here for you, and we'd love to get you involved in this program. There's a simple link that you'll find included today, and we'll be following up with information after today's session. Please make sure you go online, sign up for this help, and get access to your own personal advisory board of support and champions. None of what we do, including today's program, would be possible without our amazing supporters and providers. As a nonprofit committed to access and equity in the field of entrepreneurship, we need our sponsors and our donors more than ever as well. And so to all of those who believe in this opportunity and access to quality education, resources, and mentorship, thank you. To NASDAQ, Lehigh University, Bank of the West, KPMG, Wilson Sonsini, Woodruff Sawyer, BPM, and EdZTE, thank you for all you do for us. Now, our webinar today is going to be completely designed with you in mind, just like most of our programs here at the center. We're going to be kicking off with an expert panel here in just a minute or two. But before we get started with that, and again, a reminder, Q&A open throughout today, so please use that Q&A function at the bottom of your screen. We're going to launch just 2 polls that I'm going to ask each of you to participate in. All of the programs that we build at the center are baked with one clear thing: who you are as founders and what you're going through and what you need our help in bringing forward. So the first poll that I'm going to be launching has been running since the start of COVID. And it's basically asking you to share, how are you doing right now in this moment? For many of our businesses, we know that you are simply keeping your head above water and trying to survive. There's a lot of anxiety, understandably. There always is in entrepreneurship, but especially right now. And we also see usually a healthy dose of optimism. So if you can take just a moment and let us know, how are you doing today? Just you, yourself, as an entrepreneur doing so much for our communities. We'd really appreciate it. I am going to go ahead and share this poll here. Thank you to all of you who have participated. Not because, again, it is about being in one zone or another, but because we want you to know more than ever, you're not alone in how you're doing. Now, the second poll that I'm going to launch here in just a second is asking you, what is keeping you up at night? Entrepreneurs always have many things that are keeping you up at night. Can be family, can be work, can be life related. But again, this insight is actually going to help us figure out what programs we're going to be bringing forward in the next 6 to 10 weeks. So go ahead and let us know if it's finance, sales, marketing, scaling, pivoting, surviving, team dynamics. What is your #1 challenge right now that you are struggling with? And again, these polls, these insights, you will see shepherding us forward into what the next programs are that the center offers. So I'm going to give just a second or two for everyone to complete this. Thank you for all of you jumping in and letting us know what your struggles are right now. Not surprisingly, a lot on finance and sales. Also, a lot on the team side today. So thank you so much for sharing that. I'll go ahead and end that. And again, as always, share those results with all of you joining us today. So now, without any further delay, let's go ahead and talk PPP. We have an amazing panel that is coming back again to share new insights, new perspectives, and the updates on what we all need and what those questions are that you have right now. So without any further delay, please join me in giving a very, very warm welcome to our panel today. We have Roxann Burns, Senior Vice President, Small and Medium Enterprise at Bank of the West, Theis, Director, Deal Advisory and Strategy and Accounting Advisory at KPMG, and Brady Berg joining us again from partner at Wilson Sonsini. Thank you all so much. It is great to have our band band back together again, talking once more about PPP and the never-ending changes and information coming at us, it seems like always. I'm going to go ahead and ask each of you, if you will, maybe take 30, 60 seconds to just share a little bit about your background and your recent world of PPP and the work in which you're doing. Roxanne, let's start with you, and then we will go over to Jared and round us out with Brady.
All right, sure. Thank you for having me. I have been a long-time SBA lender. I've been in the industry for almost 30 years. And I work currently in credit and operations at Bank of the West and small medium enterprise. One of the businesses that I oversee from credit and ops is SBA. And PPP, when this came up, was I started almost exactly a year ago with the bank. So I walked in the door and went back home the same day, and have been involved in the bank's PPP efforts since the very beginning.
We have been so glad that you have been guiding us and walking beside us in all of this last year, Roxanne. It's great to have you back. Thank you so much. Jared, over to you.
Thank you very much. Jared Theis, as I mentioned, a director in the accounting advisory practice for KPMG. It's hard to believe, but in 5 days, we'll be coming up on 1 year of the CARES Act. And that was when I joined a national team to help out with the CARES Act programs and volunteered specifically for the SBA, not knowing what I was going to get myself into 1 year later now. But, have been involved since then and helping a lot of our, on the borrower side, helping clients understand, navigate some of the rules, and especially over the last few months, a lot of work with forgiveness and all the calculations and data gathering and things that come with that, and learning, tips and tricks and best practices. So it's been a really fun process working with companies of all shapes and sizes. And now recently, I'll touch on it here with nonprofits, but with all the expanded eligibility, they're getting quite a few questions coming from that group too, which has been great. So turn over to Brady.
Thank you. Brady, over to you. Oh, on that wonderful mute moment, sorry.
Thank you. Figured it out. Can you hear me now?
Yeah, sounds perfect.
Super. All right. Well, great to be back again, Nicola, and to get the band back together again, as you said. I'm Brady Berg. I'm a corporate partner at Wilson Sonsini, one of the leading firms in Silicon Valley representing emerging growth technology companies. I work with entrepreneurs, investors, and emerging growth technology companies of really all stages. And have been one of the folks here at our firm that has taken the lead on following the PPP program, which has been of great interest to our clients as they've tried to navigate the program.
Fantastic. Well, as everyone can see, we have an amazing experience set here, fully engrossed for the last year plus, I guess a year now, as we say in PPP. So what we're going to do is we're going to start very quickly with an overview on how maybe some of the nuances are affecting different types of businesses. And then we're going to go straight into the Q&A. So Jared, I'm going to have you kick us off, if you will. You mentioned perfectly nonprofits being one. May we get a couple of minutes update on exactly how it is affecting nonprofits right now and some of your inside tips for those of us in that field?
Sure. And I won't be able to cover everything in just a couple of minutes, but I'll try and give some highlights. And, I think as this has evolved through last year, nonprofits for the most part weren't eligible in PPP. And then as the Economic Aid Act, was released in late December, allowed certain 501c6 orgs. And then recently with the American Rescue Plan, a couple of weeks ago that was enacted, it brought a bunch more organizations in as well, including some larger 501c3 organizations. And so there's certain conditions that are in place, regarding how much lobbying activities an organization can have, et cetera. No more than 15% of the annual receipts, no more than 15% of their total activities can be from lobbying. And for a lot of these nonprofits, it's under 300 employees. However, for certain of the larger, organizations, nonprofit organizations, so things like your charitable organizations, your scientific, testing for public safety, et cetera, those are going to be things where they allowed actually the 500 employees per location. And that's a recent change that I think a lot of our larger nonprofits have been looking at. That's created some eligibility for them and also some relief that they previously didn't have. I know our nonprofits were kind of left in different pockets with the different programs that were out there. So hopefully this creates some relief. A couple of things that I'm seeing though is still trying to navigate exactly how the entities are structured and who qualifies for that. So definitely something that you want to take a good look at with that. And then also when it comes down to certain of the organizations, calculating that maximum loan amount, how do I go about doing that? And what's been great, and we've touched on it before, but the SBA actually put out some specific guidance on first and second draw loans that went through the calculations that you can do for the maximum loan amount, and it's by entity. And so in that, it also includes specifically for nonprofits that have a Form 990. And so exactly what to do with that 990 and 941s and how to calculate payroll, as well as for nonprofits without a 990 and how to go about doing that too. So there's very specific steps on that, as well as if there's nonprofits applying for a second draw, there is very good guidance out there on exactly what qualifies as gross receipts. So for the revenue reduction calculations, it follows the Internal Revenue Code, Section 6033. So provide some good types of receipts there, donations, gifts, sale of assets, income from investments, those type of things that typically get reported on a Form 990. So what the guidance also does is there's some FAQs specific to nonprofits that go through and actually outline the specific line items on the 990 that you would use to calculate gross receipts. So guidance is certainly evolving, but at least they're putting out some things now that help us navigate some of those questions that we've been getting pretty significant over the last few months.
Really, really great to hear. And I know for many nonprofits, that's been top of mind. And so having that guidance available and those insights really helpful. Brady, obviously on the other side of the fence, we have our large enterprises, very complex offerings all the way around when it comes to thinking through PPP obligations and opportunities and challenges. I'm going to put two things to you right now. One, because I know you have updated data around the numbers and where things are. Would you give us a sense in general as to how we're doing right now when it comes to PPP? And then secondarily, could you give us some of those tips and strategies at the large enterprise, large company layer too?
Thanks, Nicola. Hopefully, by the way, can you all hear me? I see a mute button. There we go. Okay, great. So yeah, so I'd say larger small businesses, because by definition it's a small business program, right? But there are, what we've come to realize, and I feel like this is sort of like a graduate level course. I think this is our fourth time all getting together for this program. So we're kind of skipping quickly, but we've realized that this program is it's a broad umbrella, right? So there's lots of different kinds of companies that are applying for loans under this program, receiving loans under this program, and different aspects of the program apply to different types of companies. So I'm focusing most on our types of clients, the venture-backed companies, the larger small businesses. But high-level data to date, and there have been four now, different appropriations of PPP funds throughout this 1 year program. There have been, depending on how you count, about 800 billion appropriated, 700 billion has been distributed through the program. So a massive program. There have been 7.8 million loans in total. And that includes both first draw and second draw loans. The average loan size is about $90,000. But importantly, as you get to some of the things I'm going to talk about, there's a category of lenders. The maximum loan size under the first draw program is up to $10 million. And there's a special category for lenders or borrowers who have received loans of over $2 million. There's 30,000 of those loans, which in 7.8 million loans total is a tiny percentage. It's 0.3% of the number of loans, but it's about 15% of the total funds that have been appropriated. It's about $100 billion. So it's a significant portion of the program. And that's where a lot of the focus on the audit has been for the SBA. Of this most recent tranche, what we're calling PPP round 3, there still is about $100 million left in the program, or about 35% of what was appropriated back in December. Interestingly, about 90% of that is going to second draw loans, which tells me that not a lot of, even though people can apply first time as a first time borrower, most of the interest in this aspect of the program or this phase of the program has been for second draw borrowers, people who received a PPP loan in the first couple tranches and are now coming back for a second loan. So the things I wanted to talk about for the larger borrowers are really three things to keep in mind. One are these change in ownership rules, which if for a venture-backed company that is continuously out raising funds, in venture financings are potentially going to be acquired. There are rules that say that if there's a 20% or greater change in ownership in your cap table during the life of the loan, it's not just in one specific transaction or to one person, it can be aggregated. It can be, 5 different 4% transactions that can get you above the 20% threshold. You have to get lender approval for that transaction. You have to provide your documents to your lender beforehand, before that transaction closes. So this is catching a number of companies unaware that, are finding out there's, can cause some delays in financings. There can also be trip ups if you have a convertible note round, because you really count the change in ownership on an outstanding basis. So if you had convertible notes that are converting in a round of financing that wasn't supposed to be 20% change in ownership, but it winds up kicking it above 20% because there's some things that are converting in that round, it can trip up borrowers. Then more importantly, if it winds up being a greater than 50% change in ownership, either through a sale or an asset sale, or even a venture financing that winds up going above this 50% threshold, you also have to then get SBA approval, which can take much longer than just getting lender approval. Or alternatively, you can either pay off the loan before that transaction closes, or you can seek forgiveness and put money in an escrow in control of the lender that's there to satisfy the loan in the event it's not forgiven. So you just have to be aware that change in ownership can be a significant thing to track for a PPP borrower, and it's certainly causing. That's where I'm spending probably the bulk of my time for our clients are navigating these rules. Second thing to keep in mind are that there are unique issues for these borrowers with loans above 2 million. So I mentioned that it's a tiny percentage by number of application, but a large percentage in terms of the amount of the funds that have been have gone to this class of borrower. And in the SBA's rules, they said anybody with a loan above 2 million, for instance, isn't going to get the safe harbor for the necessity certification you have to make when you apply for the loan. So you're not going to be deemed to have made that loan in good faith like smaller borrowers will. So you have to keep very good records and have to be able to document that this loan was truly necessary for the larger borrowers. And you're also going to be subject to audit. So when you apply for forgiveness, any borrower with a loan above 2 million should expect to receive, if you're a for-profit borrower, it's called Form 3509. There's a similar form for not-for-profit borrowers, 3510. And it's an 8 or 9 page questionnaire that goes into quite a bit of detail on your business activity, and it really goes to the heart of whether this loan was necessary. So just know that you're going to get, this is the start of your audit process, and it is causing delays in the forgiveness process because there's just quite a bit more information to get through. And I think the third thing to keep in mind for the larger borrowers, really for any borrower, but this is not free money. I think I sometimes will hear this sort of concept kicked around. And there are potential False Claim Act claims that can be brought either directly by the Department of Justice. There have been very few, and it's only the most egregious cases. But these loans have been published. There's a database that lists every borrower who's taken the money, and you can search it, and it doesn't list the actual loan amount, but it does show the buckets of the size of the loan. And we are starting to see some what they call key tom lawsuits. These are whistleblower lawsuits that are brought by private individuals called realtors who bring claims on behalf of the government. And this information's out there. You think of it as sort of like a plaintiff's bar, right? So for the larger borrowers, just know that your name's out there as having taken a loan, and that not just the government you have to worry about, but potentially disgruntled employees who could be False Claim Act, it could be whistleblower realtors or plaintiffs firms that could bring these suits. So you have to think about this down the road. And I've seen many people talk about the fact that this program had to get pushed out so fast on an emergency basis, a massive amount of money. And they do hold the lenders, by statute, they're not holding the lenders responsible for the loans. So it's really putting the onus on the borrower to stand behind their certifications. it's what they call a pay then chase approach. So, get the money out there, but know that people have to ultimately be responsible for their own applications and be subject to these rules. So it's, for the larger companies in particular, I think you have to be very careful and not, fall, to this notion that it's that it's somehow free money. This process is going to play out for years as people start to think through whether everybody took these loans or should have taken them or not.
So interesting, and I always learn so much from each of you as you sort of share these insights. One quick question, Brady, before I turn over to Roxanne. For our startups who were not venture backed, or maybe just had a note in that they were attempting to raise upon when they drew that first PPP loan, I assume then in the subsequent reporting that there is a piece of that where they say, have you raised money, and if so, sort of going into the details and getting a copy of the cap table. Is that traditionally how it's showing up right now?
Yeah, if you're above 2 million, right? Yeah. So first, by definition, like I would think most of those companies are venture backed or have sources of funds. So there's a set of questions that do go into your financing history, and you're going to have to show your borrowers, your people on your cap table that are above a certain percentage, and they're able to track the change in ownership. So yeah, you're going to have to do quite a bit of disclosure.
All right, there we go. Good things to know. Thank you. And be a good apple always. That's usually one of our top 3 pieces of takeaway. Do your diligence, document, and be a good apple, which we know everyone here is certainly meeting those metrics for. Now, Roxanne, obviously on our micro businesses and our small businesses, always a moving minefield. It feels like, of trying to keep up with everything going down. What are some of your recent tips and strategies and insights that you're getting, sort of being on that front line for so many of those businesses right now?
Yeah, I think the latest thing to come out was the new guidance for Schedule C filers, and that you can use your gross revenue instead of your net income to calculate the owner's compensation. Right? If you are a Schedule C filer and you have employees, you still calculate the employee piece the way you would on a regular loan, a regular PPP loan. But then now, instead of using a net income, you're using a gross income. And as Jared mentioned, the SBA does have very good guidance out there on how to calculate your loan by gross revenue now for Schedule C filers who are eligible, whether you have employees or you don't have employees. So that is something to keep in mind. I'll also share with you that a lot of lenders, when you have a government program that ends on March 31st, that comes out with an entirely new concept on March 3rd, it is not very reasonable to think that everybody can pivot, that quickly. And I know there were some lenders who chose not to take applications at all for Schedule C. And there's others who, like us, found a more manual way to do it. But I think that, certainly the extension that was passed in the House and the one that is looking like it'll pass this week in the Senate is all about providing more time for those really small companies to, make their application. Let's see. Probably in one of mine, this is a really weird tip, but number one question we get is, do I use my 2019 payroll or my 2020 payroll? And the answer is you have a choice. You use the payroll that makes the most sense for you. And it's the same thing with your Schedule C, whether you use your 2019 or your 2020. Most people kind of had a better gross revenue year in 2019 because their businesses, if in fact your business was not impacted and you needed the PPP loan, you probably want to use the year that, made the most sense for you. The other thing, just real quick, is, and I don't think we talked about this last time, was these compliance checks and holds that lenders are struggling with to clear, and SBA is struggling with to clear in a timely fashion. I will just tell you that they chose to do a public record search using a variety of government databases as well as third-party databases like LexisNexis. And we are all working diligently, all lenders and SBA, to try to clear those holds. We have a significant amount of false positives because you could get flagged for criminal record and it would be a misdemeanor, and that is not the standard. So I think I want people to be aware of that, that lenders are, actively working on those. The other thing on forgiveness is your covered period can be any time between 8 and 24 weeks now. It's not one or the other. It's any time between 8 and 24 weeks. So you cannot apply for forgiveness for your 2021 loan until 8 weeks from the date that you got it. So that's something to keep in mind. And owner compensation for eligible forgiveness. I wanted to just give a little hint on that because this whole, how do you calculate owner compensation and forgiveness? And the answer really is it depends on the period that you're using. And to find this, you have to dig into one of the IFRs on forgiveness, the one that came out earlier this year. And, basically, if you use 8 weeks divided by 52, you're going to get a percentage. And that percentage is, for example, 15.38% of your eligible annual compensation, the owner's compensation. The max is 2.5 times payroll, average monthly payroll, right? So 2.5 months is 10 weeks. And if you, take 10 weeks divided by 52, you're 19.23% times that annual. So I know that's a little math and it would be great if I had a picture, but I just want you to know that this is, guidance that's in one of the IFRs. It's very, you have to dig in, but just you think logically. Your covered period is so many weeks, divide by 52, and you will get a percentage that you can then apply to the annual owner compensation, which is capped at 100,000, whether you use net income or gross revenue. And then the only other thing that I think you wanted me to cover, and I wanted to cover, is the idea if they pass an extension to the program, which is looking very, very likely, not all lenders are going to open their doors again. And this is not mandatory that lenders participate. There are reasons why lenders may or may not choose to open their doors. Some lenders have a very large number of applications still pending, that they're still processing. The unique thing about this program that SBA has never experienced before is that it stops on a date. So if you stop on 3/31, that is the last day SBA can authorize. But if you submit a loan, let's say on that date, there's no way you're going to get an authorization the same day because SBA does not do that anymore. They do this compliance work. And if there's any issues on your first draw PPP loan, there could be a hold on it for getting a second draw loan. And that needs to be cleared. So the solution that has been provided in this extension bill is that SBA is allowed to take applications through May 31st, and they have an additional 30 days to work on funding. So the application date stops, and then they can continue to fund. And that's probably something we should have contemplated, when we, went into the 2021 PPP program. That wasn't thought about, but it does make a difference. And I think that, there's a lot of lenders, bank and non-bank lenders out there doing PPP loans, and you should be prepared for that. It's one of the reasons why Bank of the West closed its applications, stopped taking applications last week, because we had so many applications in process and all those loans that were in review with SBA. First in, first out, we really needed to focus on helping the folks that came in the door early, and try to get their loans approved. But I'm glad that, Congress is going to extend it.
Absolutely. And I know that there are a ton of people, Roxann, I'm going to stay with you just for 1 second, that are sort of sitting there going, is there any possible way, without sort of having that perfect crystal ball to give us down to the hour and the day count, how long is it taking right now? What are you hearing in general that it's taking by the time that the application goes in to the time that a decision is generally being made this time through?
Yeah. So I can tell you in a really straightforward way, if we have a deal that's, that the application is clean, comes in, there's no back and forth with the customer, you can get that loan approved. We can get it out of our door usually within 3 days. When it gets to SBA, it's taking about 48 hours if there is not a review and or a compliance check. So it can a kind of a quick turn is 24 to 48 hours for SBA, but I've had loans that sat there for a week and then cleared. We've had loans that have these holds or reviews where we need to do corrections. We need to get certifications from clients. So that whole process, there are holds that the bank can certify, the lender can certify, and there are holds that only SBA can approve. Mm-hmm. And really at the end of the day, SBA doesn't decline loans so much, they just don't approve them. And we won't know until the last day. I mean, sad. That's the tricky thing, is that they're not saying you're declined, they're just not approving you. And we won't know the final until the last day of the program.
Got it. Now, on the flip side, we've had a number of questions, understandably, that have come in and said, I'm actually in this really weird middle of things where I'm applying for forgiveness on my first loan, haven't heard anything yet, and starting to kind of go through this second loan environment. How long are we seeing on the forgiveness side of things? How long is that generally taking for review and approval or pausing? And then does one actually have to be granted that forgiveness piece before you can get that second tranche out?
I'll answer the first part because that's the easy answer. You do not. You do not have to have your first loan forgiven in order to apply for second draw. Different set of characteristics. It's the revenue reduction. I'll let Brady maybe talk a little bit about how some of the review stuff is going. But if you come in with a complete application, and let's talk loans over 150, less than 2 million, right? If you come in with a complete application, that process can be pretty straightforward. When it gets to SBA, I will tell you if there's any sort of review that they're doing on that first draw loan, and I don't mean the 2 million, loan necessity rule. It means they ran compliance checks and ran your loan through these public databases after the 2020 round. So it can be quite straightforward, or it could be a little chunky, and they'll ask us for more information. And remember, SBA has the right to review any loan. Yeah. They're obligated by law to review loans over 2 million.
Right. That 2 million threshold. Anyone else want to add anything in from like what you're seeing or characteristics?
I think Roxanna answered it perfectly. She always does. But the point is, it kind of depends, right, on the forgiveness. I think it really does depend on which. If you're below 150, it's very easy. If it's above 2 million, there's an audit questionnaire and a whole different process and a whole different set of data. And then I think if you have because of the volume of these loans, the SBA is and the lenders are utilizing some of these screens, and data screens that are red flagging some applications. If sometimes they're just typos, right? I mean, somebody forgot to use they used a different EIN in different places, and it's holding something up. So there's a number of things that can cause the process to grind to a halt. But it should, we're generally seeing that they're going pretty quickly, except for these other, categories of trickier applications. I think, Roxann, the lender has 60 days, or the way the process is supposed to work by the rules is 60 days to process a forgiveness application from the time it's submitted. And then the SBA has another 90 days on the back end of that. But I think we're seeing many going much faster than that. And the general rule is that most of these
some going much longer.
Right, exactly. Yeah. So if you're in a problematic, then And it's kind of getting pushed off to the side, and it can take a while, but the other ones, they're pushing through the bulk of them quite fast and efficiently.
Right. And if you think about it, the SBA, when Congress passed the 60, 90-day rule, they didn't contemplate another round of PPP.
Right.
And they didn't think to modify that part of the CARES Act, which the SBA is, I mean, we've had loans sitting there since October.
Yeah.
So in forgiveness. And I would tell you, we're not like 100%, but we're probably 99 point something and change of getting those out in 60 days or less, and most of them in much less, like, weeks,
Right.
As opposed to months.
Yeah.
So I think that, it just depends. The small ones are now with this new schedule form S go faster. But I had a conversation I didn't have a conversation. I sat on a call with SBA a couple of weeks ago, and the new administration their goal is to have all 2020 loans forgiven by Labor Day.
Wow.
That's, because we're coming up to the end of that 16-month payment deferral period. Well, 24 weeks plus 10 months. But I think what you're seeing is a commitment to get this behind us. The percentages that actually get approved are quite high. So, I am confident that we'll get there. But I think that the new program just really shifted resources from forgiveness to origination.
Yeah.
Yeah, I think maybe the other thing I would add is, it was mentioned a couple of times, but a lot of it's on the quality of the documentation submitted to the process. There's very clear guidelines on, okay, here's the required documentation, here's the documentation that should be maintained. And I've helped a number of clients through this process, and I think what I've seen them have a lot of questions coming back is when they had a lot of explanations for types of variances or employee changes or those things that were hard to just track, or certain things like reconciliations of your 941, the number of employees in your 941 versus your third-party payroll report versus what you put on the application. So just being cognizant of those different judgments and assumptions you make and making sure that you can support them, I think is a huge step in the right direction. But to the points being made, I mean, what I've seen is, and I think the SBA has data now that they released March 11th, 99.7% of loans or something like that have been approved under $1 million. But as you can see, that when it gets above that number, they don't release any data for us yet. And a lot of that's because they're still working through all the audit requirements and everything, and it's an evolving process. And, we're seeing that with some of our clients as well, that my smaller loans are getting approved in a fairly rapid clip. The ones above that number, though, are getting a lot of questions and back and forth, both with the lenders and the SBA. So I think you just have to be geared up for that process, knowing, if your loan's larger than $1 million, it's going to be a process, and you've got to support your positions.
Yep, absolutely. All right. Well, so speaking of rapid clip, like I mentioned at the beginning, a ton of amazing questions have come in live today and well ahead and submitted. So I'm going to go rapid fire, just like always, and we're going to try to address as many as we possibly can. I know we're going to fail right up the front. We're not going to get to everything, but we're going to try to do our best to get to as many as we possibly can. So I'm going to start out by asking, and Jared, I think you co-volunteered for this one. Can you discuss ERC and how it overlaps with PPP, please?
Yeah, and real quick, and there's a lot of nuances to it as well, and ERC eligibility has its own fact pattern. But, ERC was previously not allowed for those that took a PPP loan. When the Economic Aid Act came out December 27th, it allowed those who took a PPP loan to also take the employer retention credit, which is a refundable credit to your payroll taxes. And so you actually retroactively applied it back to March 13th of 2020. And there are kind of two aspects of the program. There's the 2020 aspect, which has certain thresholds, and then there's the 2021 aspect that has different thresholds and actually a little bit easier eligibility, lower revenue reduction amount to bring in more folks, and also higher credit amount as well. So if you've taken a PPP loan and haven't looked at ERC, I would strongly suggest consulting with a tax person on that to kind of start working through those eligibility requirements.
Really helpful. And I have a feeling we're going to stay with you for just 1 second. Is a forgiven loan subject to state and federal tax?
So on a federal basis, it's tax exempt income. So the federal or the loan forgiveness part, the expenses themselves are deductible as well. Now there's certain nuances related to when you recognize that tax exempt income. I think the general advice is in 2020 to match up when the expenses were incurred as well, especially if you have the intent and are reasonably expect to go and achieve forgiveness, submit for that. From a state level, it does differ by state. So a lot of them follow in line with the federal guidance, or they do that, but some of them have their own rules or own changes to those rules. So I can't speak to every state, but I would for sure take a look at those state guidance too to make sure you're reporting that correctly.
Got it. We had a couple of questions coming in around looking to modify a first loan, and I'm not sure how complex that whole process is, but to what extent do people need to get clarity on the modification side before they even start thinking about or looking at forgiveness?
I'll talk to that because that for us is a completely manual process. And there's a policy notice that came out for lenders, and it's a very narrow group of people who qualify. Seasonal employers, because they made put that guidance out late in the program, and some businesses that have seasonal employees did not use their seasonal, their seasonal 12 weeks. And so we are allowed to consider increases on 2020 loans when somebody had seasonal employees. The other group that is listed in that are businesses that are partnerships, where the owners of the partners didn't get their partner compensation included, just like sole proprietors, Schedule C filers. You use the K-1 schedule, but it allows lenders to go back and consider that. If you were a farmer or rancher that was a sole proprietor using a Schedule C or Schedule F, and these are for 1040 filers using Schedule F, we can consider an increase using your gross revenue. And then the last group are really folks that paid off their loan in safe harbor, and maybe, as guidance came out, realized that they would have been eligible. And whether you do a modification or a new loan really depends on if the lender had already canceled your loan in the SBA, because we were encouraged to cancel loans within SBA. So I would give you kind of an idea, we've gotten probably 60 requests and only 9 qualified. So it's really very narrowly interpreted. If you made a mistake, that's not going to fit the rules.
That's not what that rule is meant for. We gotcha.
No.
Well, speaking of rules that were meant for or not, Brady, this was a really interesting question. And I know we've addressed it in the past, but again, for sanity's sake, a company is looking to buy another company. The company that they're looking to acquire got a PPP loan, is in the process of trying to get it forgiven. What does the acquiring company need to keep in mind as that process is unfolding with the soon to be hopeful acquired company?
Well, one, beware of these change in ownership rules. So I think the fact pattern you gave is that the target in that case would have applied for forgiveness already. So if this is going to be an over 50% change in ownership, so a full acquisition, they would have to get SBA approval, right? Or have applied for forgiveness, which they've done, and then escrow the full amount of the PPP funds with the lender until the forgiveness process is played out. And so then that escrow is there to say if the loan for some reason wasn't forgiven, let's say it was one above 2 million and they determined that they weren't eligible in the first place, then that $2 million that's held in escrow, assuming that's the amount of the loan, would then go to the lender to pay off the loan. If the SBA winds up forgiving the loan in whole or in part, then that escrow is returned to the borrower. So as a buyer, you have a couple of things to think about. One, some buyers are just saying reputationally and hassle factor, logistics, the fact that there's this database and there's potential Keton lawsuits or liability that comes down the road. And by the way, the borrower has to assume responsibility for these loans, as well as the applicant who applied is also on the hook. So nobody kind of gets off and gets to pass the buck in this regard. Some buyers are just simply saying, as a policy matter, we're requiring our targets to pay off the loans to get the deal done.
Got it.
Some are willing to let this process play out, but yeah, that's how. Sorry, Roxanne, was that a question?
I was gonna add to that. The other thing is that every lender has a different note. At Bank of the West, we have a prior consent requirement if you change ownership. So that was part of our note originally, that you needed our prior consent. And I would tell you, this is not add water and stir. Like, you don't want to call a lender up, a week before your deal is supposed to close and think you're going to put this all together in, 5 days. You really need, because, we need to review the purchase and sale agreement and setting up the reserve account. Reserve accounts can only be in the name of the PPP borrower, not the new business. So it is just as Brady said, and I'm going to talk about this from the smaller company where they're typically doing an asset sale. This is 100% change of ownership. You just need to just keep in mind that you want to talk to your lender early on.
Yes.
Got it. Good sage advice there. A few people interested and probably a little worried, just like always, when it comes to thinking through the Department of Labor audits on forgiveness and whether or not those funds were actually deemed necessary. What are you seeing when it comes to any questions being raised, and how people are responding to that specific question as it is? Whoever wants to address.
I think this goes to the audit. I think the question probably in the Department of Justice.
Yes, sorry.
Who bring the claims, but yeah, this goes directly to. I mean, as Roxanne said, anybody, the SBA reserves the right to audit any loan, but those above 2 million, will be audited. So there's roughly 30,000 loans above 2 million. It's a lot to process. Small percentage compared to the 7.8 million that have been processed, but still a lot of loans to get through. And then so they're sending out these questionnaires. Again, assuming a for-profit entity, it's called the 3509 questionnaire. It's an 8-9 page questionnaire that you only have 10 days to respond, and so the lender will send it out, and CFO or whoever would be responsible at the borrower is going to have to have a lot of detailed questions answered that they then submit back to the lender, work with the lender. I'd kind of let Roxanne maybe give us some visibility as what happens from there, but at some point that gets reported out to the SBA, and that's just sort of the start of an audit process.
That's exactly right. That's the beginning. We get a request for information, we get the form, we get the documentation that is requested by SBA, they call it the notice to review. We get the documentation and the form from the client. We upload it to SBA and they do their thing. There is a lot of back and forth. So SBA will follow up and ask us questions. I can tell you we've had some situations where we are absolutely, convinced this is a full forgiveness, where we are working with an analyst at SBA who does not agree with that. And I just want to remind people at some point in time, don't argue with an SBA, let them make their point, their decision, and then appeal it. There is an appeal process, and I think especially because these, a lot of these are the bigger, these are bigger loans to bigger companies. Just at some point in time, you just want to, and even I would say that to any lender, just at some point in time, let them make their decision. You've given them everything you can give and arguing back and forth. But I also know from our conversation with the SBA a couple of weeks ago, they were very clear. They are going to dig into those loans. And they are going to take as much time as they need to go through them. And everything else, they're trying to do quicker, faster, better. And in fact, this administration is trying to figure out a way to go all the way to 2 million with that short, that Schedule S form, or at least to 350. So again, there's a lot of motivation by the administration to really accelerate forgiveness, unless your loan's over 2 million. And then they're going to go in with a magnifying glass.
Yep.
Can you combine first and second loan forgiveness to just have it be one set of forgiveness? No, each one.
No.
Okay.
Mhm.
No, but I would comment that it is the same application for both loans.
Okay.
So, you can't combine them, but it's the same application.
Got it. Got it. If businesses.
Oh, one other thing on that is that you cannot use the same cover period. So yes, if you got your loan in 2020, your covered period has got to be different than your covered period because it's 8 to 24 weeks from the date of disbursement. So you cannot just, the form is the same, the application's the same, but your data has got to be from 2 different covered periods.
Got it. Got
Your
it.
expenses.
And to that point, Rox, it's you have to, when you apply for the second loan, you have to have either spent the loan from the first loan or certify that you will have spent it by the time you get the second loan. So that just highlights the point.
Yeah. And not every lender, I mean, we took the tack that we weren't even going to entertain a second draw loan until 8 weeks after your first one was funded in 2021, because the way that rule is written is very loosely interpreted. So it might have been conservative, but you have some lenders who were willing to do that next one on certification. We took a little bit more rigorous position.
Yeah.
Got it. There was a question that had come in interestingly in chat that said, I'm not going to apply for forgiveness, but is there actually a deadline from which I have to spend down all my money? And if I don't spend it all, do I get penalized? And if so, how much? Anyone want to kind of address that really quickly?
It's that covered period that Roxanne was just mentioning. So you have 8 to 24 weeks, but you can't spend. It wouldn't be a permitted expenditure if it was past the 24 weeks after receiving the loan.
That's right. Even if you didn't apply for forgiveness till 10 weeks after the end of, your payment, people get confused with the covered period and the deferment period, the payment deferment. SBA defers that payment 10 months afterwards. They give you 10 months to apply for forgiveness, but you have to show receipts, payroll for expenditures, eligible expenditures for that covered period. And if you don't, if let's say you only had some, you will not be forgiven. Okay. So if you only spent some of your PPP loan in that 24-week covered period from the date of disbursement, and you had you didn't have enough receipts, you will only get forgiven for the portion that you can document. Okay. And the other aspect of that is that SBA does not, I get this a lot. If you want to pay off your PPP loan without going through forgiveness, because maybe you realize maybe you want to do that, SBA does not cover your accrued, they don't cover your accrued interest except for the part that is forgiven. So if you're partially forgiven, they only pay the interest on the forgiven part. They don't pay it on the unforgiven part. If you pay it off without going through forgiveness, you have to pay the accrued and unpaid interest. And there's a little confusion about that.
Yeah. Okay.
And I would add too that the interest is occurring from the day you get it dispersed. So, it's not starting a certain period in the cover period, anything like that. The interest accrues just like a normal loan, basically once you get that loan. And so, if you decide not to go for forgiveness for any reason, or applies to you, that interest is going to be due and payable by you under the terms of the loan. So.
Is there ever a procedure that would allow a business to obtain a PPP loan, think in the restaurant space for the most part, that dissolved and then reformed itself during 2019 to 2020 in conjunction with a change in location? No.
You have to certify that you have to provide evidence that you were in business on February 15th.
Got it.
And that does, I understand the logic behind that question, but the rule is kind of clear.
Are there any options available for R&D firms out there right now when it comes to PPP loans?
So I think I saw that question, Nicole. I think that relates. I'm guessing, if I'm reading between the lines, that question relates to the 25% decline in revenue for the second draw loans. So many R&D firms who just don't have any revenue are saying, "Wait a minute, does this rule really mean what it says?" And yes, it does. So not eligible for a second draw loan if you don't have that decline in revenue. So if you had zero revenue before, you can't have a 25% reduction.
Yep, makes sense.
But I think I would add too, Brady, that is, as you mentioned, that's a second draw that has the revenue reduction requirement. So
Right.
take a look at the eligibility rules on the first draw loan, which doesn't have that same revenue requirement.
Correct. Yeah. Good clarification.
There were a couple of questions, unfortunately, that came in asking about what happens if a business is actually forced to close prior to the announcement of the forgiveness of the loan in the first place. Any advice for business owners who are going through that very difficult situation?
Well, you cannot apply for a second draw loan if you've already applied for bankruptcy. However, if you've received a loan and you've gone into bankruptcy, you can apply for forgiveness in the bankruptcy process.
Perfect.
And even if you didn't, let's say you just orderly liquidated your own business and didn't go bankruptcy, the key thing is that you still can apply for forgiveness if you spent your loan proceeds during the covered period for eligible costs. Where you will really get a little sideways with the federal government is that if you don't apply for forgiveness because your business closed and you took the PPP money and you didn't spend it, that will come back to you. Keep in mind, while there are no guarantors on personal guarantees on PPP loans, there's no collateral. The one thing that SBA does have is they have information on the principals, and we have seen them go after, people who, have potentially committed fraud.
Yeah, and you're making personal certifications, right?
Exactly.
People who are signing those applications.
Yeah. Well, we're not going to end on bad eggs. We're only going to talk about good apples being here. So I'm going to ask one last question. It's crazy how fast our hour always flies by. And that is, what is the one piece of advice that you do want people to walk away from today that we didn't cover? Anything else that you, or just want to reiterate on the importance of? Roxann, let's start with you. Brady, we're going to go to you next, and then Jared, over to you to close us out. Roxann, piece of advice.
Okay. I would tell you this: don't hesitate because you don't know the answer up front. Submit your application for forgiveness, submit it to the lender, let them tell you. Even though we all have these wonderful email boxes, there's a gazillion questions in there. And just looking at some of your questions in the Q&A that I would love to answer, just apply, okay? Once you start the process, the lender will give you feedback. Don't be perfect.
Approachable and coachable. I love it. Thanks, Roxann. Brady, over to you.
That would be my advice as well, is to work with your lender. I mean, I think many borrowers, and Roxann, not that you're remotely scary, but they're scared of their lenders, right? In a traditional setting, right? They don't want to admit that something is wrong. They're worried about being foreclosed upon.
Yes.
I mean, here I think the lender is a facilitator of sorts between the SBA and the borrower. And so I've seen a lot of really healthy collaboration. And so once the borrower kind of gets past that fear of admitting they don't know the right answer or thinking that there is a gotcha here, that the process goes much smoother. So don't be afraid to talk to your lender and your customer, your client representative.
And your advisors, right, all the way through. I think everyone is in this together very much. We're all sort of figuring it out as we go. So no one is expected to have all the magic answers. You couldn't possibly do that anyway.
Right.
Thank you, Brady.
Yeah.
Gary,
and I would just add on to that, talk to your friends and your peers and your colleagues and those type of things too. I mean, the stuff's evolving. We're all learning. People are in different stages of the process and have different things they've learned. This guidance evolves every day. I mean, when we even prep for these type of webcasts, the three of us bring up stuff that we're hearing and seeing and how we deal with it. So it's just evolving. There's not answers to every question either, unfortunately, and there just won't be by the time you probably go through. So to the advice, start the process, start working through that and answer the questions as they come up. And, if it's something that can't be solved, then at some point during the process, it will be for you. So.
There we go. Love that. We're leaning into our optimism always for dealing with entrepreneurs. And when in doubt, we will figure it out. You just keep asking those questions, and somewhere, somehow, people will provide the answers that we need. So to all of you joining us, thank you for doing just that. Thank you for leaning in,
Thank you.
asking the questions, providing it. Our amazing panelists, as always, such a treat. Thank you for being so approachable and so helpful to all of our entrepreneurs struggling right now and going through this process collectively. And for all of you, again, we do always end by asking one favor from you. We can only get smarter by you telling us what more we can be doing in support of you and how we did today. So please do take a moment to fill out that survey. Let us know what else you're struggling with, what else you'd like us to cover, and we will do our best to do just that. We have some great programs coming up. Please stay tuned for those. Have a wonderful afternoon, evening, day, and we will talk with all of you soon. Take care. Thank you. Bye-bye.
Bye.
Thank you.